We have Geoff Dennis, independent emerging market commentator, and Mark Matthews, head of investment research, Julius Baer, joining us to understand the story and its impact on the markets from a near-term perspective. Good morning to both of you. Thanks very much for taking out the time. Mark, I'll start off with you first. What did you make of the decision? So they gave the world a little bit, not perhaps what the world was completely hoping for, but they bought time to figure how to resolve this matter come 2019.
Well, I think that it's exactly as you say. It's a stay of execution, and I don't think there's any point in being bearish right now because the S&P was down 7% in October, and it only bounced by 2% in November, and the market very clearly wants to rally into the year end. And we had Mr. Powell becoming more dovish last week, and a deal between Russia and Saudi over the weekend. And you put this on top of it, I firmly believe we're going to get a year-end rally, but I also think that it is a stay of execution in the sense that if you look at the two different statements, they were radically different. The U.S. statement said that negotiations are going to immediately begin on forced technology transfer, intellectual property protection, non-tariff barriers, cyber intrusion and theft. And the Chinese statement made no reference to any of that stuff. So I think, we will revisit this problem in the new year.
Geoff, what is your take on this? They've bought more time, about 3 months, but do you really think a fundamental agreement can be reached in the next 90 days?
Is this for me? Is this for Geoff?
Yes, Geoff, for you.
Yeah, okay. I think it's still very hard to be sure about that. There's no suggestion as far as we can see that we're getting any close to a formal agreement between the U.S. government and the Chinese on sorting out these trade issues. I think Mark is absolutely right. I think what you've got here is you've got a pause, and I think it was as much as the market could expect at this point. But I think the policies of the U.S. administration are very well laid out. They're very clear. And obviously the Chinese also have their own interest to defend. So I don't think we can assume with the news over the weekend that the trade war is quote unquote over or any of that sort of conclusion. But as Mark says, if you combine that with the Fed statement last week and the fact that this is a very good time of year seasonally for markets to do well, I think we will have a rally into the end of the year. But the risk for next year is that these trade issues are escalated once again, because what you're going to have in 2019 is both a softer Chinese economy, although probably one that's only showing modestly slower growth, and you're almost certainly going to have a slower U.S. economy. So a weaker global economy, led perhaps by the U.S. and China, would make a fundamental agreement on these trade issues in the future more complicated. So I think, as we've said, I think this is very good short term. I don't think we've solved the problem long term at all.
Mark, if the message from the Chinese and from the Americans is that let's talk, now whether this is going to really materialize into something fruitful or not, that is debatable. But can I safely assume that as of now the world leaders are understanding that if there is a big trade war in 2019, it will hurt everyone?
Yes, I think so, in the sense that a big trade war could be enough of a catalyst to start a global recession. Then it would hurt everybody, yes. So it's nice that it was averted, at least for now.
Mark, really on the lighter side, I don't understand this 90-day period, because in last 2 weeks the Americans would be on a holiday. When Americans will come back, the Chinese will go on a holiday. So this 90-day window, I'm not so sure if any decision will be taken.
Well, maybe you're right. I don't know why they chose 90 days. I have no insight into that. I'm sorry.
Geoff, G20 is not the forum where you would expect the Chinese and the Americans to come together, but the fact that there is a joint statement, or the fact that there is a intent, and the intent is towards sorting out all the differences, should we view this as rather positively? Should we have a half glass glass half full approach rather than glass half empty approach?
Definitely, I think you have to have that in the short term. And as Mark said earlier, it's really just a stay of execution, I think. And the point is that you're absolutely right. You do not really see major bilateral agreements achieved at a G20 meeting. Typically, in fact, what you get with a G20 meeting is a communique at the end, which is full of platitudes. We'll support the global economy, we'll try to pursue free trade, etc. But you don't really get any specifics. And I think that what could be changing here for next year, which I think gives some hope that after this 3-month pause, if you like, that there may be more progress on alleviating the trade tensions between the U.S. and China, is precisely the point I made a few moments ago, which is that the U.S. economy is going to be slower in 2019. I think the White House was probably saying a few weeks ago, we've got a very strong U.S. economy. We're growing at 4% plus in Q2, 3.5% in Q3. We can afford to be tough on the trade side because we're in pretty good shape. Next year, that might be different, and that would be the reason perhaps for some hope. But frankly, if I can use the famous expression here, all we're really doing here is kicking the trade uncertainty, kicking the can down the road. We haven't resolved it. But it's good, and it's good because of what the Fed did, what Powell said the other day, and also we're long overdue a good rally in emerging markets, and I think we're getting that also at a very appropriate time of the year from a seasonal point of view.
Mark, Geoff, both of you, thank you so much for taking the time out and speaking with us and really deciphering how world markets should be reading into this 90-day truce or rather ceasefire that Xi Jinping and Trump have called for.